And listen, going through hard times is so important because you did when you first started your business and what you had to do to grow it. And now going through, the last, couple years has not been easy. but you remember what you had to do in the grind, in the beginning to get you through it. And no different than me. And I remember when I brought in the 2 new agents, they're like, yeah, is now a good time to start to be a realtor? All right, Dave Butler, welcome back, part 2. And listen, we had a good first session there. And I want to dive into all the other things that are happening right now in the market. So we know that there's a lot more now government announcements, government incentives. I want to touch on your predictions, some recommendations that you would recommend going into 2025. And then I want to touch on Dave. What is Dave working on? All these different companies that you've started, and Dave 100. You got a lot of things going on. So why don't we kind of just jump right into it? Because we know that the government now is doing a lot of incentives. I don't think it's good. What are your thoughts on it? They're giving out $250 to anybody who makes less than $150,000. Is that even good for the economy? Is that good for people? I mean, if I'm having a difficult time and I see 250 come to me and I don't understand how the economy works, I may look at it as a good thing. What are your thoughts?
There's not an economist, I believe, that you'll speak to that will say that doing handouts in a G7 country is good for their economy. It's not. It's actually inflationary.
Yeah.
And to be fair, what's sad is we all know what happens when the government hands out money. And this isn't a knock on the general public, but this is just the way the system is rigged up, is that businesses, especially we were talking off air about this, like if I'm a business and in December and January, I know everyone's getting $250 to now $4 or $5 billion is entering into the market. Guess what? My prices don't go down, they go up. Well, guess what happens when prices go up? That's inflationary.
Right.
So, you're not incentivizing businesses by announcing, and giving businesses a heads up that consumers are going to have more money. That's actually going to work against us.
When is that going or launching?
They're fighting about it right now. Obviously, it's been big debate in the House of Commons, and they will, if I'm right, they will need the NDP to sign off on this. But from what I understand, I think they will. So,
well, of course, the NDP are going to love this, right?
NDP will likely like this because they're kind of sheltered from, they get to kind of play the middle ground, which is, hey, that's political process and politics is how that works. I'm not going to change the game, but listen, to go back to the subject, I think handouts are never good. I think you and I could agree that that $250 or that $4.5 or $5 billion could be better spent going to businesses who could then create new jobs and then pay their employees more. I'd rather get $250 from me working harder, from my employer having more money to pay me than to just give me $250. I know there's people that are sitting here listening to this going, no, give me the $250. But the reality is that's just a temporary, that's not a long-term gain. At least if that money goes into businesses, investment for our, to be fair, let's even be honest. Let's look at it this way. If the government was to just take that $5 billion, invest it in something that's going to make 6-7%, right, returns, then actually in like 5 years they could give everybody $500 each instead of $250. But they don't think like that because, to be fair, they're obviously trying to do this in a time where they're sitting low in the polls, and it really, if you want to try to get some extra votes, $250 might do that for you.
Yeah, I was going to say that as well too. It's a great way to get more votes.
Yep.
This is like taking a hit of crack. It's not going to fix your situation or the problem that you're going through. If you think $250 is going to help you, it's not. I think the best way to do it would have been lowering corporate taxes. And I get it. As a little man, you look at that and you say, well, hold on a second, that's not fair. Why are you giving the break to the corporations or the companies? But they're going to employ you. They're going to be able to do way better and smart decisions than the government will any day.
At this point, and I think that's our basis for what you and I are saying, is that at this point, I don't think the government's decision-making with respect to fiscal policy is going to be any better than businesses that are out there employing people. I would, at this point, if I have to choose between the money being in the government's hand and them deciding what to do with it, or the money being in business owners' hands and them deciding what to do with it, I actually trust the business owners more. And some people might disagree with me, but The reality is that the government's just going to give us that money and then go take money, and they're also taking it from our own taxes, right? So it's not like that's our own money they're just giving back to us. It's kind of a joke. Whereas at least if it was used as investment into businesses, someone like you or myself or other business owners, I'm not putting that in my pocket. I'm looking to use that to invest to build my business more. I can create more jobs. Maybe the person that is at my company that's really good that I haven't been able to give a pay raise to because of the way the economy's been, I can now give them a pay raise, and that money now goes into their pocket because they earned it, not because it was some free giveaway.
And the other thing as well too is that's going to add to the deficit.
Yep.
Then there's going to be interest on top of that.
100%.
And it's going to cost you even more in the future.
Yeah,
whether or not you or your kids.
There's not an economist that you will speak to, in my opinion, here in Canada that would actually make the case that this is a good thing for our economy. It means that likely our inflation reports that come out for December, so the December data that's going to come out in January, and then the January data that's going to come out in February, that's now got an extra $5 billion of spending, which is going to be inflationary. So don't be surprised, everybody, if they talk about inflation ticked up another notch. That's expected now. That's and that's being priced into the markets, right? So now that we might have a delay where we thought interest rates might be by next spring, summer, because of this, that might be delayed now till the fall. This is a terrible thing. Like overall, $250 is great in your pocket. Overall, this is a mess. This is going to cause way worse problems. But I think it's par for the course with the way the government's been working the last couple of years.
Yeah, no, I agree. So here's a question I got for you. So the last Bank of Canada meeting in October, they did a jumbo cut.
Yep.
They did 0.5%, but the bond yields kind of stayed where they were, which are tied to fixed rate mortgages, and that didn't decrease.
Yes.
What are your thoughts on that, or what caused that not to decrease?
It's a very simple statement.
Yeah,
it was already priced in. So I've been on your podcast before. I've been on other medias where I've explained that the bond yields are the canary in the coal mine, right? You remember you need to know when the coal mine's gonna just disintegrate, right. And so the canary was always they would make the sound and they would fly out, and you knew, okay, get out of the coal mine. Well, that's the bond. The bond yields tell you what the Bank of Canada is gonna do. So believe it or not, the bond yields had already, and this happens months in advance. So. And you have to understand, and I think this is a good way of looking at it, is that the Bank of Canada sets their interest rate meetings for 8 times a year. They're predetermined, right? And it's humans that are sitting there making a decision, coming to a consensus, and then making their announcement. Right. That's how the Bank of Canada moves their rates. That's tied to the variable rate. The fixed rates are coming from the bond market. The bond market is a $1 trillion market. There's massive institutional trading going on there, right? They are some of the smartest traders in the world, okay? And that market is 100% months ahead of the Bank of Canada. If the Bank of Canada is going to do a move, the trading market already knows about it months ahead. And so when if you go and look, if you actually look at the bond yields, you'll see there was this crazy downward movement prior to some of these, the jumbo cut coming. That was already priced in months before. Then when the jumbo cut happened, the reason that you didn't see anything is because that was the 50 basis points were already priced in. Had it been a 75 basis point reduction, you actually would have seen the bond yields likely come down a bit, but not very much, right? They would have come down a little bit just to represent that extra quarter that they hadn't priced in. But I actually think, believe it or not, that the market had actually priced in in between a 50 and a 75. And when it was 50, that's why you saw the bond yields actually flat and even go up. And then, of course, other things like Trump winning, hearing about tariffs. Remember, it's a traded market. The fixed rates are tied to a market where money is moving by the second. So a headline here, a headline there will cause traders to make moves. You need to look at the long-term trend, and we are in a downtrend on the yields, and we will continue to be so for quite some time.
So based on that, then now the next rate announcement is December the 11th.
Yes.
Based on where the bond market is today,
yes.
What's your thoughts? What's your prediction on what's going to happen?
I can tell you exactly. Bond market doesn't know. Bond market says good chance it's 25. Outside chance it's 50, and they're pricing that in. So to be fair, what you will likely see come December 11th, and again, if you see weird movement in the bonds like a couple days before, that's because information's gotten leaked. Yep. These are, again, trillions of dollar institutional trading, information flows that you and I would never get. Mm-hmm. But the reality is that currently today, if they did a 25 basis point reduction, you would actually probably see the yield stay flat or even go up a little bit. If you saw a 50 basis point reduction in December, you probably see them flat or a little bit down. And I know that'll sound crazy, but that's because right now the pricing of the yield is because they don't know whether it's going to be 25 or 50. So it's already being priced in that it's around the middle. Right. So that's how it works. I mean, I've followed, I'm a chart nerd with these bond yields. And I mean, I've watched this stuff like a hawk. I study this stuff like crazy. It was amusing to me because all the Twitter finance bros that think they know what they're doing were all, when it was a 50% reduction, I saw some of them that some of these people consider as wise and they listen to going, I'm so confused how the bond yields are going up. And it's like, well, if you're confused, it's because you don't know what you're doing. Right. Because the truth is the ones that do know what's going on, this was already a priced-in movement, and the reason why you're seeing the yields go up a little bit is because they were already pricing in a possibility of 75. So when it wasn't a 75, the yields have to readjust.
Got it. So that's the one thing that you're always paying attention to. You look at that, and that's what it calls.
I'm looking at it before I got on the show. I'm on my phone. It's on my trading view. I have alerts set. So if there's a movement, to a level which I think is an important level, I get an email that says check the bond yield chart out, and I go and I check the bond yield chart out. And you have to. I think at this point right now, you have to be studying that. Like this is not something that you study when the bond yields are staying flat and there's not a lot of movement. I mean, there's nothing to study then. It's just a boring trading market. But we are in a high level of volatility, and we have been for the last 4 years. And so the bond yields are going to provide you with a lot of information as to what's going to happen.
Got it. So based on that now, and this is going to come out after that December 11th announcement, should people be going into a variable? Should they be going into a fix? Or is your recommendation what your recommendation has always been? What allows you to sleep at night?
A little bit. I mean, there's two ways you look at it as a broker, right? There's obviously, you have to assess your client's risk profile and, let them dictate their risk, in terms of what they're willing to take. I'd say what I will say is that a lot of the clients that I work with, we have discussions. We have open discussions. I am giving them my thoughts. Yep. My thoughts for the last year and a bit have been that I do not want to be taking, well, I don't want to say year and a bit, for the last, since 2020, since the middle of 2022, I have just starkly not wanted anyone to take long-term fixed rates. They were elevated. You do not want to take a 5-year fixed rate and then 2 years from now have so much regret because rates are down. It was inevitable that rates were going to come back down. It was just a question of how high will they go. And so, when you're using strategic decision making in a time like that, it was an easy decision in the middle of 2022 to tell people 1-year fixed rates or 2-year fixed rates. Right. That was simple. The reason why you didn't want to in 2022 tell clients to take variables because we didn't know how high the Bank of Canada was going to have to take it in their battle against inflation. So then it's like, okay, what's the best thing? Well, let's get into something that's flexible. Yes, the variable's flexible, but it's also on a heater on the way up. So I don't want to jump on that. Right. I'm going to take a 1-year, I'm going to take a 2-year because that's going to allow me that when things finally, the dust settles, the smoke kind of unleashes through the air, that maybe interest rates are lower. Someone who took a 1-year fix in the middle of 2022 would have come up for renewal in the middle of 2023. Guess what they would have done? I would have had them do another 1-year fixed. And now they would have come up for renewal in the summer of 2024. And guess what? They would have now been able to make a much better decision because now more information was known. We had already topped out on interest rates. Right. And so, but the key is if you're asking me, what am I telling clients to do today? For the last year, it's been variable. Unless in terms of my recommendation, because you want to be in a variable rate when you know the Bank of Canada has initiated a cutting cycle or is going to be initiating a cutting cycle. That is definitely an elevator I want to ride. I want to ride the downward elevator, right? And the thing that a lot of people forget about the variable, or they don't know about the variable, is that it's actually just a vehicle to get you to a lower fixed rate. And some people say, why is that? Because in every variable rate contract with these banks, even though you're signing a 5-year term,
yep.
Some people, well, what you're saying, Dave, going to 1-year tier. Why am I signing a 5-year variable? Because of the caveat in a 5-year variable term, at any time, you call the bank and you say, I'm done with my variable. What are your fixed rates you're offering me? And they will offer you their best fixed rates they have, and you can just sign on the dotted line and take it. There's no credit check. There's no income. There's no nothing. Zero. You just sign. It's part of your contract. It's called conversion. So now play this out. I know interest rates are going to keep coming down, okay? Which means the fixed rates are going to continue to come down. Okay, so why wouldn't I want to be on an elevator that's going down? And then when I see, let's say, any 5-year fixed rate between 3.49 and 3.99, I jump off the elevator onto that platform. And guess what? I'm stuck I'm now on the floor, right? And that
Right.
floor, maybe it's 379 for 5 years, but that's what I want to be on. And that's been the strategy for the last year, and it's going to continue to be the strategy for the next, hopefully 6 months. But it's really just a strategy to get you into a lower fixed rate. I am a firm believer that, having studied the charts, and I'm a nerd with this stuff, I've been doing this for 22 years. If you get offered at any time a 5-year fixed rate between 349 and 399, you have to considerably look at that as something that's good for your family. We don't know if there's going to be another mini inflation spike coming around the corner in the end of 2026 or 2027, right? So these are things you really have to look at in terms of your long term. I just know this. When I play out the game plan, I go variable today, lock into a 5-year in 2025, hopefully at 3.49, 399, anywhere in between there. Next renewal date, 2030. I don't have to worry about no medium inflation spike coming in 2026, 2027. I've secured my family's finances, and I've secured it at a good rate. And yeah, look, if the fixed rate ends up going down to 299, okay, you can live with that regret, but like, come on, like, let's be realistic. 299, a 5-year fixed rate with a 2 in front of it is, in the last 25 years, is not the average. You really want to look at averages, and also look at the uncertainty. The government was the ones telling us, don't worry, interest rates are going to stay low, 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 low for a long time. Go and invest, buy homes, da, da, da. They weren't right. So the idea is, like, take your future and make your decision and put that in your own hands. I'm not trusting them anymore. And I think they've lost the trust of a lot of people. I think you need to trust people that seem to understand this stuff and who seem to understand the trends. And that's really what I do. I don't want anyone to have a renewal between 2026 and 2029. I want to just have you set till 2030, 399, 379, and you got affordable payments. And let's let the rest of the craziness happen in between, and then you'll make your decision in 2030.
Yeah. You know what? That's really good advice. It really is. And obviously, this is something that you've done for a very long time. And where are interest rates today? And then based on what you're saying, you're thinking that interest rates are going to be below that 4%. So what can you get today as a homeowner and as a real estate investor?
So today, on a 5-year fixed rate today, if it's insured, so it's less than 20% down, or if it's this new crazy CMHC rental program that's going to come in the new year, you're on a 5-year fix, you're close, man. You're like, you're 409, 419, 429. It's you're gonna have about a 0.3 room to play with, in the sense of every bank's and all the lenders are different, right? So, but I mean, heck, I can report officially that we have had clients been able to get 399, and that was as recent in the last 6 weeks, right? Yep. But that also understand that the yields were at their lowest point about 6 weeks, 6, 7, 8 weeks ago, right? And that's when we were able to snag a lot of those deals. And so, look, as to go back to my point, if I can get you 399 on a 5-year fix, I'm recommending it. Right. But if I can't, and if I'm not super close to it, then I'm still recommending the variable. But yeah, I mean, on a 5-year fix insured, you're anywhere between 409 and let's call it 429. For a 5-year fix conventional, which is there's no CMHC insurance on, it's a regular mortgage at a bank, you're in around the 4.5% range, right? And you can get better. Like, the other thing too is, and this is, we're putting this information out there, but I mean, the reality is this day and age, there's been a massive change in the mortgage broker world. The banks, even more so now, clamor to mortgage brokers that are bringing them high volume. And what that high volume does is it allows you as the broker to go to that bank, and you have a little bit more power now than the next guy or girl that's a mortgage broker. And you're able to go to the pricing manager, who maybe you've known for 15 years and was your underwriter at this bank when you started in the business, and ask them to see if Treasury has any extra discounts they can apply to your client. You provide a good case about why your client deserves it. And a lot of times, if you're in that position as a broker, you can get discretionary pricing, which is going to be a lower rate than your fellow mortgage broker. But that's something which is, these banks it's a little different. When I started in the 2000s, that didn't exist. Everyone had the same rate. But over the years, the banks are definitely clamoring to, if you're bringing that bank, your brokerage is bringing that bank $500 million in mortgage volume. It's $500 million. Right. You know what I mean? That's significant for them, to the point where they will try to make concessions for you, you know? And again, a lot of it comes down to relationship. I mean, you can never discount the fact that, look, in my particular situation, I started in the business in the early 2000s, 2002, 2003. Yep. as I point out, some of these people that were underwriters at, let's say, Bridgewater Bank that were starting in the business when I was starting in the business are now managers of different departments at different banks. So those are relationships that you keep. So as a broker, if you're 22 years in the business, you're 30 years in the business, 15 years in the business, and you were someone that, was doing a lot of volume and you were making relationships with these people at the banks, that's going to help your customer.
For
You know
sure.
what I mean? And that's when you're choosing a broker. I mean, it's no longer like I'm just going to work with him because he's a family member of mine. It's like that's going to cost you.
Right.
Because someone like myself or a Dan Eisner who runs True North or a James Laird who runs Rate Hub and Canwise, these guys are going to come in and swallow you up because they can offer better rates because they're able to go to the bank, go, look, I send you $1 billion in business a year. I think you need to get 0.1 off the rate on this.
Right.
And the banks will work with you. When you are a partner to the banks, they will work with you.
Right. Yeah. And you partnered with a lot of the banks as well too, right?
This is part of the game in the mortgage broker game. You have to be. You're not just a mortgage broker. You have to make the relationships with the banks because it will pay off for your clients, and that's what this is all about. It's about how can I get my client a better rate? If it means I got to go, schmooze and hang out with these guys in my off time to build that relationship so I become friends with them and I can get things for my clients, then that's the differentiator. And I can say that to my clients. Like people say, why do I want to use you than the other broker? I go, listen, I don't know the other broker, but to be fair, I'll tell you my story. My story is I'm 22 years in the business. I started when I was in my early 20s, and a lot of these guys that are running these departments are now the same age as me, and I've known them for a long, long time. And that just helps me. 100%. And they get it. They go, okay, that makes sense.
Yeah, it's your network, right? It goes back to that old saying, right? Like your network is your net worth, right? Yep. And it's such an important thing is that the connections that you have, which you've built, and that's so important for people to hear that, right? So
it's paramount.
Yeah. Now there's another government incentive that's potentially coming out or is coming out where now they're cutting the GST for 2 months on snacks and fucking booze and
video games
and kids' clothing. Like, what are your thoughts on that?
Listen, I have a 2.5-year-old, so kids' clothing I don't mind. But I mean, I just is this? I'll just ask the question: is this a long-term fix? Is this a medium-term fix, or is this a short-term fix?
Short-term. It's short-term. It's more votes.
Yep.
Right.
Yeah. And instant relief. But then to you made a great point. You go, it's like crack, and I go, yeah. Well, what's crack? It's I've never smoked crack, but I mean, it looks like when you see people do it, it's instant relief. Yeah. And instant relief is no matter what in life. Instant relief, the way it comes to you is generally speaking not great. Like, I want to work hard for my stuff. I know people will be like, well, no, I don't want to work hard for it. That's fine. But I'm saying, like, I want to work hard. I want to teach my son or my children to work hard. You know what I mean? Like, that's going to help our economy and our world that we live in. I know that sounds really like, that's a very interesting mindset, but it's like, no, that's the truth. And maybe I look differently because I now have a child, but I'm like, I want to leave the earth with an impact and hopefully it's an earth, in a world or an economy that my kids can also flourish in. I don't want to leave them, and I don't mean to hit the boomers down, but I don't want to leave it in the same situation the boomers are leaving it for some of the other people. You know what I mean? Because things got a little awry there. Yeah,
and you do have to be careful of not trying to have an easy run at life. And I think that's kind of what you're also saying as well, too. Like, where you see, families where, they're multimillionaires and now their kids grow up and they're so used to flying here and going there. And you got to be careful because now all of a sudden they get into the drugs or they get into this and they think that's how life is and they screw their whole life up. Sometimes you need to go through the hardship in life. Like I did another podcast and we're talking about like rent control. And it sounds good, but rent control is not, because now you're putting people in this bubble and inflation, you're protecting them from inflation, and you need to go through inflation. That's just it's part of life. It's part of the way that the whole setup is, that the way the government has it.
Look, I think
created.
I think we can all agree that if we were handed a bunch of money, it'd be hard for us to not take it. But we can probably all agree that if I took 2 Garys and one Gary worked his butt off, you know what I mean, and he ended up with $1 million. And then the other Gary didn't work his butt off. He just got handed $1 million. I'll be honest with you. I want to deal with the Gary that worked hard. I don't want it because the Gary that got it handed to him, that's you didn't do anything for that. You know what I mean? And to be fair, I'm not going to learn anything from you for getting a handout. But a guy that made it, went through the hardships, now got the treasure at the end. That's a guy I can learn from. I can't learn from you when you get freebies. And I think that's, and again, I know there's people that will listen to this be like, nah, I want freebies. Listen, I like freebies too, guys. Yeah. But when I like getting a free chocolate bar. I like getting a free dessert at dinner. But getting a free life is different. It's going to create weak people.
100%.
And again, that could be a philosophy. Oh, you're quoting Joe Rogan or whatever. But it's like no, it's a quote and it makes sense. You know what I mean? Like you can't, like, you got to really go through it. And some of the things I've gone through, some of the worst things I've gone through in my business career or even in my life, I look back and I go, well, if going through that got me to here, then it was worth it. Yeah. You know what I mean? And maybe it could have been an easier road, but I've now got, maybe a bit more battle scars, and I'm now going to know how to deal with things a little bit differently. And I'm going to be able to deal with hardship a little bit better now. And it's not going to be so foreign to me, and I'll maybe react better to it. You know what I mean? And that's really all it is in life. No one's perfect. You're not going to live this perfect 100% life. You're going to go through stuff, and it's how you deal with the crap. Right. And are you someone that gets the crap thrown at them and you just fold like a cheap suit, or are you someone that, went through it, fought it, and then the next time it happens to you, you now know what to expect, and you made it, and you defeated it. Like, I just think that's. But again, our children these days are watching YouTubers and podcasters, and guess what? That's probably an easy life, or it appears to be an easy life. I think actually, if you've really looked deep down and you saw some of these people's real lives behind the scenes, they're actually working very hard.
I bet you they are. Yeah.
You're not a streamer with $10 million, and people might say, well, because he eats taquitos all day, and he eats weird food, and he gets it. But 10 million followers are following that. He has to put in a lot of time, or he or she has to put in a lot of time preparing to do that, making sure they have the right audience. Very few people, it's just given to them. But the reality is, it appears to you and I that it's just a guy eating a hamburger. Yeah. And that's easy because we can all eat a hamburger. But what went behind that, the production quality, the game planning, how they're going to do it, how they're going to make it look right on camera. Because anyone can do that stuff, but they're making it the right way, and that's why they're getting the followers.
And listen, going through hard times is so important, because you did when you first started your business and what you had to do to grow it, and now going through the last couple of years has not been easy, but you remember what you had to do in the grind in the beginning to get you through it, and no different than me. And I remember when I brought in the 2 new agents, and like, is now a good time to start to be a realtor? Fucking right it is. This is the best time to start, because when hard times come again, you'll know exactly what you need to do, how you have to grind to get through it. But if you're starting in easy times, you think it's always like this, and it's not.
No, you have the foresight to be able to show them that, hey, if you can make it during the tough time, you'll definitely make it during the good time. Yeah. You know what I mean? And that's who I want. I want the people that I want on my team are the people that can make it through the tough time. And you bring up an interesting point. I mean, I've been 22 years in the mortgage business. The last 4 have been, I don't want to say the last 4, 'cause I'd say the last 3 have been extremely trying, because you have to revamp your business. I mean, a lot of people won't know we had grown up when the government said, hey, we're going to keep rates for a for a long time. Obviously, it wasn't a blind trust, but it was like, okay, if they're going to do this, I have to build, our business was expanding at such an insane pace, and you never want to get client complaints. So you want to expand your business, bring in more people so that you can handle, because you could take 20 people that are handling all these mortgage applications. If you double the amount of mortgage applications, then your team is now having to handle that. And maybe they can't handle that. So you have to bring in more help. So we had actually just gone crazy with hiring, and then all of a sudden July of 2022, it just felt like the market just bottomed out and it was gone. And here we are holding on to all these contracts of people that now I have to let go, you know what I mean, and pay severance too, and all this fun stuff. And but to your point, it's a great learning experience. My first 18 years was just a rocket ship in this business all the way up. I got to ride, if anyone followed my career, 2002, up to 2021, 2022. It was, you couldn't do wrong in mortgage business almost, right. But the last 2 years have definitely been trying, but I like it. I know it sounds crazy, but I like the pain. Like, I actually like,
so do I.
It sucks. I mean, but it's going to make you or break you, and you're going to really find a lot about yourself, and you're going to find a lot about your team and the people that are around you.
This is the time where you have to learn how to tread water.
Yep.
This is about treading water, and that's what we're doing this impacts everybody.
Yeah.
And you got to find a way to fight through it. We got a few minutes left, and so I want to talk about the different businesses that you've got going on. So you've got your Dave Butler 100, and we'll talk about that and whatever else you got. You got a couple minutes here.
Yeah. So Dave Butler 100 is kind of cool. I mean, I could backtrack. My baby is Better Mortgage Select. That is the company that started as Dave Butler, and I became the rental mortgage specialist. And known throughout the country, and I would get calls from all different investment clubs across the country, obviously, and I was lucky enough to know you, and we would always work together, and people would send me their clients because I would help them scale their portfolios. I knew the different banks and the ways to in the I would say order in which to go to them to maximize your amount of your portfolio, and that turned into, over the years, my main business, and it's now instead of Dave Butler, it's now the name Better Mortgage Select, and that is my baby. That is all my original crew that I've hired and brought on, and Dan Padden, Lorenzo Pota, Mike Zanzini, all the guys, Amanda, Saul, they are running that for me, and it's running to the point where I've been able to step out and do some other things, open my own brokerage along with Dan and Lorenzo. So we have our own brokerages of Better Mortgages, and that's what our company Better Mortgage Select operates under. But also Better Mortgages is open like your real estate brokerage. You're open if there's good not mortgage, but if there's good real estate agents, you will bring them on under your. So that's our Better Mortgages. Better Mortgages, our brokerage. We bring on agents. We try to mentor them, have them become better. Inside of that is Better Mortgage Select. And then what I did is recently, and you were obviously, you helped me promote it on your podcast, but I introduced a cool little thing, Dave Butler 100, which is I'm working with 100 Canadian families now every year, and it looks like we're gonna have to grow that number from 100 higher after the response we got.
That's a good problem to have.
Yeah, it's a great problem to have, but it's effectively just geared towards people that are looking for the lowest rate on their owner-occupied home, because as you may or may not know, and we talked about it, rental mortgages are a little bit more expensive than owner-occupied mortgages. So I already have my one team that works predominantly with real estate investors and does a very, very good job at Better Mortgage Select. Now Dave Butler, I did an audit of my time, and I figured out I had about 3-4 hours a day that I can actually work with your regular customer and help them get a lower rate than their bank is going to offer them. And so far today, we opened it. It was October 9th was our official day we launched it, and we're already way ahead of schedule. I mean, I think the last count we were at over 40, I think 43, and we're not even 2 months into it. So I think Dave Butler 100 is going to turn to like Dave 250 or something. But
probably maybe 2050.
We'll keep going. Eventually, we'll just take the Dave Butler out of it and give it a company name. But for now, it's actually been fun. I mean, for me, it's grassroots a bit. I'm speaking to the clients. So like when you call to get the lowest rate, you're dealing with me. Like I know, and it's been cool being back in sales, speaking to clients again, doing sales calls. I joke with Dan all the time, like, I'm really enjoying this. He's like, well, that's because you're not dealing with clients that have 10 rental properties. I'm like, fair enough.
Yeah, Dave, listen, man, I appreciate your time. I appreciate all the knowledge that you always drop. People want to get a hold of you. What's the best way to do it?
DaveButler.ca. Hit me up, and at Dave Butler MTG on Instagram.
Awesome, brother. I appreciate your time, and we'll do this again.
Appreciate it.
All right. Peace.